Hello everyone, welcome back to the channel. So the procedure in financial matters, Article 112, annual financial statement known as budget in common terms. Clause 1, the President shall, in respect of every financial year, cause to be laid before both the Houses of Parliament a statement of the estimated receipts and expenditure of the Government of India for that year, in this part referred to as the annual financial statement. Clause 2, the estimates of expenditure embodied in the annual financial statement shall show separately. Subclause A, the sums required to meet expenditure described by this constitution as expenditure charged upon the Consolidated Fund of India, and subclause B, the sums required to meet other expenditure proposed to be made from the Consolidated Fund of India and shall distinguish expenditure on revenue account from other expenditure. Clause 3. The following expenditure shall be expenditure charged on the Consolidated Fund of India. A. The emoluments and allowances of the President and other expenditure relating to his office. B. The salaries and allowances of the Chairman and the Deputy Chairman of the Council of States and the Speaker and the Deputy Speaker of the House of the People. C. Debt charges for which the Government of India is liable, including interest, sinking fund charges, and redemption charges, and other expenditure relating to the raising of loans and the service of and redemption of the debt. D. First, the salaries, allowances, and pensions payable to or in respect of judges of the Supreme Court. Second, the pensions payable to or in respect of judges of the Federal Court. Third, the pensions payable to or in respect of judges of any high court which exercises jurisdiction in relation to any area included in the territory of India or which at any time before the commencement of its constitution exercised jurisdiction in relation to any area included in a governor's province of the Dominion of India. E. The salary allowances and pensions payable to or in respect of the Comptroller and Auditor General of India. F. Any sums required to satisfy any judgment, decree, or award of any court or arbitral tribunal. G. Any other expenditure declared by this Constitution or by Parliament by law to be so charged. So, Article 112 provides for an annual financial statement, also referred to as the Union Budget of India. It is a statement of the President of the estimated receipts and expenditures of the Government of India in a financial year. The President shall, in respect of every financial year, cause to be laid before the House of Parliament in an annual financial statement. The estimated expenditure is also shown separately under two heads. A. The sum charged upon the Consolidated Fund of India, and B. The sums required to meet other expenditure out of the Consolidated Fund of India. The expenditure that is charged upon the Consolidated Fund of India includes the following. First, the emoluments and allowances of the President and other expenditure relating to his office. Second, the salaries and allowances of the chairman and the deputy chairman of Rajya Sabha and the speaker and the deputy speaker of the Lok Sabha. Third, salaries, allowances, and pensions of judges of the Supreme Court. Fourth, pension of judges of the High Court. Fifth, salaries, allowances, and pensions of the Comptroller and Auditor General of India. Sixth, debt charges for which the Government of India is liable, including interest, sinking fund charges, and redemption charges, and other expenditures relating to the raising of loans and service and redemption of debt. Seventh, any sum required to satisfy any judgment, decree, or award of any court or tribunal. 8. Any other expenditure declared by the Parliament by law to be so charged. A sinking fund is a fund containing money set aside or saved to pay off a debt or a bond. A company that issues debt will need to pay debt off in the future, and it helps to soften the hardship of a large outlay of a revenue. Article 113 procedure in Parliament with respect to estimates. Clause 1. So much of the estimates as relates to expenditure charged upon the Consolidated Fund of India shall not be submitted to the vote of Parliament, but nothing in this clause shall be construed as preventing the discussion in either House of Parliament of any of those estimates. Clause 2. So much of the said estimates as relates to other expenditures shall be submitted in the form of demands for grants to the House of the People, and the House of the People shall have power to assent or to refuse to assent or to any demand or to assent to any demand subject to a reduction of the amount specified therein. Third, clause third, no demand for a grant shall be made except on the recommendation of the President. So appropriation bill is a money bill that allows the government to withdraw funds from the Consolidated Fund of India to meet its expenses during the course of a financial year. So this was not about Article 113, it was about Article 114. Under Article 113, Clause 1 means that any expenditure which is charged upon the Consolidated Fund of India can only be discussed but cannot be submitted in the Parliament for voting. As per Clause 2, the other expenditure which is proposed to be made from the Consolidated Fund of India shall be submitted to the House of the People in the form of demands for grant which may be allowed or refused by the House of the People. Clause 3 states that the grant shall be made only on the recommendation of the President. And Article 114, Appropriation Bills. Clause 1. As soon as may be after the grants under Article 113 have been made by the House of the People, there shall be introduced a bill to provide for the appropriation out of the Consolidated Fund of India of all monies required to meet A. The grant so made by the House of the People, and B. The expenditure charged on the Consolidated Fund of India, but not exceeding in any case the amount shown in the statement previously laid before Parliament. Clause 2. No amendment shall be proposed to any such bill in either House of Parliament which will have the effect of varying the amount or altering the destination of any grant so made or of varying the amount of any expenditure charged on the Consolidated Fund of India, and the decision of the person presiding as to whether an amendment is inadmissible under this clause shall be final. Clause 3. Subject to the provisions of Article 115 and 116, no money shall be withdrawn from the Consolidated Fund of India except under appropriation made by law, passed in accordance with the provisions of this article. So, appropriation bill is a money bill that allows the government to withdraw funds from the Consolidated Fund of India to meet its expenses during the course of a financial year. Article 114 provides that appropriation bill shall be presented in the House of the People to withdraw the money from the Consolidated Fund of India for grants made under Article 113, and the expenditure shall be charged on Consolidated Fund of India as previously decided by the Parliament. The amount of this money and its destinations shall not be altered by any amendment. The money shall be withdrawn only by the law in the accordance with this article. Article 115, supplementary, additional, or excess grants. Clause 1. The President shall A. If the amount authorized by any law made in the accordance with the provisions of Article 114 to be expended for a particular service for the current financial year is found to be insufficient for the purposes of that year, or when a need has arisen during the current financial year for supplementary or additional expenditure upon some new service not contemplated in the annual financial statement for that year, or B. If any money has been spent on any service during a financial year in excess of the amount granted for that service and for that year, cause to be laid before both the houses of parliament another statement showing the estimated amount of that expenditure, or cost to be presented to the houses of the people a demand for such excess as the case may be. Clause 2. The provisions of Article 112, 113, and 114 shall have effect in relation to any such statement and expenditure or demand, and also to any law to be made authorizing the appropriation of monies out of the Consolidated Fund of India to meet such expenditure or the grant in respect of such demand as they have effect in relation to the annual financial statement and the expenditure mentioned therein, or to a demand for a grant and the law to be made for the authorization of appropriation of monies out of the Consolidated Fund of India to meet such expenditure or grant. So Article 15 talks about three types of grants, which are discussed in brief as following: supplementary grants, additional grants, and excess grants. Supplementary grants are, it is a grant when the amount authorized by the Parliament through Appropriation Act for any particular service for the current financial year is found to be insufficient for that year. Additional grant, it is a grant when a need has arisen during the current financial year for additional expenditure upon some new service cannot not be condemned. Not additional grant, it is a grant when a need has arisen during the current financial year for additional expenditure upon some new service not contemplated in the budget for that year. Excess grant, it is a grant when money has been spent on any service during a financial year in excess of the grant for that service in the budget for that year. The President present the of the shall present a statement of the estimated amount of the expenditure before both the House and shall present a demand for excess grant before the House of the People. The provision under Clause 1 is subject to Articles 112, 113, and 114. Now, reaching upon Article 116, votes on account, votes of credit, and exceptional grants. Clause 1. Notwithstanding anything in the foregoing provisions of this chapter, the House of the People shall have power to make any grant in advance in respect of the estimated expenditure for a part of any financial year pending the contemplation of the procedure prescribed in Article 113 for the voting of such grant and the passing of the law in accordance with the provisions of Article 114 in relation to that expenditure. B. To make a grant for meeting an unexpected demand upon the resources of India when, on account of the magnitude or the indefinite character of the service, the demand cannot be stated with the details ordinarily given in an annual financial statement. C. To make an exceptional grant which forms no part of the current service of any financial year, and Parliament shall have power to authorize by law the withdrawal of monies from the Consolidated Fund of India for the purposes for which the said grants are made. Clause 2. The provisions of Article 113 and 114 shall have effect in relation to the making of any grant under Clause 1 and to any law to be made out to be made under that clause as they have effect in relation to the making of a grant with regard to any expenditure mentioned in the annual financial statement and the law to be made for the authorization of appropriation of monies out of the Consolidated Fund of India to meet such expenditure. So Article 116 talks about votes on account, which means Article 116 of the Constitution has authorized the Lok Sabha to make any grant in advance in respect to the estimated expenditure for a part of the financial year, pending the completion of voting of the demands for grants and the enactment of the appropriation bill. Appropriation bill is a money bill that allows the Union government to withdraw funds from the Consolidated Fund of India to meet its expenses during the course of a financial year. We have read previously in Article 114. This provision is known as the vote on account. Votes of credit. It is granted for meeting an unexpected demand upon resources of India when, on account of the magnitude or the indefinite character of the service, the demand cannot be stated with the details ordinarily given in the budget. Hence, it is like a blank check given to the executive by the Lok Sabha. So, exceptional grant, it is a grant for a special purpose and forms no part of the current service of any financial year. Reaching to Article 17, special provisions as to financial bill. Clause 1. A bill or amendment making provision for any clause for any of the matters specified in the subclauses A to F of Clause 1 of Article 110 shall not be introduced or moved except on the recommendations of the President, and a bill making such provision shall not be introduced in the Council of States, provided that no recommendation shall be required under this clause for the moving of an amendment making provision for the reduction or abolition of any tax. Clause 2. A bill or amendment shall not be deemed to make provision for any of the matters aforesaid by reason only that it provides for the imposition of fines or other pecuniary penalties, or for the demand or payment of the fees or for licenses or fees for the services rendered, or by reason that it provides for the imposition, abolition, remission, alteration, or regulation of any tax by any local authority or body for local purposes. Clause 3. A bill which, if enacted and brought into operation, would involve expenditure from the Consolidated Fund of India shall not be passed by either House of Parliament unless the President has recommended to that House the consideration of the bill. So, a bill which is defined as money bill according to Article 110 or any proposal of amendment regarding money bill shall be presented only on the recommendation of the President and shall not be introduced in the Council of States. Shall not be presented in the Council of States. For the reduction or abolition of any tax, no recommendation of the President is required. Clause 2 of Article 117 states that a bill cannot be considered as money bill only by the reasons mentioned in this clause. Clause 3 lays down that without recommendation of President, a bill cannot be passed by either House, which required the expenditure from the Consolidated Fund of India. And if you have reached till here, consider subscribing.